One of the things I learned from studying Warren Buffett is that you do not have to fear when stock prices drop on wonderful companies. These can create fantastic buying opportunities.
Where we make our mistakes, frankly, is where we focus on price and value and we start buying and the price goes up a little and we quit. Like Charlie referred to, we might have done on See's Candy. A mistake like that cost us $8 billion in the case of Walmart stock a few years ago because it went up in price. And we are not happy when things we're buying go up in price. We want to go down and down and down, and we'll keep buying more. And hopefully we won't run out of money. Of course, that's a different story. Charlie?
If you looked at my video on NVIDIA, when I talked about how NVIDIA can make your family rich and also how you can benefit from stock market sell-offs and buying shares of wonderful companies when the price becomes cheaper, you can see how the shares grew or how the money grew that was invested during that particular sell-off. Today, we're going to talk about Broadcom. Broadcom ticker symbol AVGO, which might, in my opinion, be the best dividend growth stock of today. I'll talk about that a little bit later in just a second. Now, the first time I purchased Broadcom was January 28th of 2020. And one of the things that I always do is I always look at how a company has performed previously. Even though past performance is not a guarantee of future results, sometimes I say the best predictor of future behavior or future performance is past behavior or past performance. So one of the things I did was I looked at Broadcom as one of the tools that I used to see how the company had performed prior to me buying it for the first time. Now, I don't just look at the previous year or the previous 2 years. I look at 5 years, 10 years, 15 years, etc. And I look at it versus the index. Now, in this chart right here, you can see this is basically 10 years of Broadcom versus SPY, which is the S&P 500 index. $10,000 invested in Broadcom would have grown to over $200,000 during this 10-year period, where it would have grown to right around $34,000, $35,000 invested in the index. Now you can see down towards the bottom the average annual total return. So Broadcom for that 10-year period had a compound annual growth rate of 35% per year. This goes back to compounding. You have to study compounding. Look up the rule of 2. Write it down in your notebook. Understand compounding. The rule of 72 and how money compounds over the long period of time. Now, when I first bought Broadcom, immediately afterwards, the stock, not right immediately, but it was right during COVID. COVID hit, and so everything went down 30% in a month. So Broadcom, from the day I first bought it to pretty much close to where it bottomed, went down roughly 48% in basically like 3 months. From the time I bought it to 3 months. So what I did was the same thing I did in the NVIDIA video. I bought Broadcom as the price became cheaper. So you can see here the first date at the bottom, 128.20. I bought 5 shares. It was $313 per share at that particular point in time. So that cost $1,500. And you can see on 317, I bought 5 shares when it was $195 a share. And it only cost me $977.02 for the same number of shares. So when the stock price gets cheaper, then you can buy more shares for the same amount of money. So that generates more and more growth over the long term. Now, the shares that were bought during this time frame, it was 35 shares total. The average cost for those shares was $235.24. So the total amount that was invested was $8,233.51. Now, of course, Broadcom last year did a 10-for-1 stock split. So now those 35 shares are 350 shares at an average cost of $23.52. And I took the current stock price as of March 18, 2025, which is $188 a share. Now that $8,000 that was invested has now grown to $65,000 or $65,800 in 5 years. So remember, as I always say, it's about compounding. It's not about just the growth of it. It's about compounding. So $8,000 doubles to 16,000. 16,000 doubles to 32,000. 32,000 doubles to 64,000. So these Broadcom shares, because I bought them during a sell-off, they doubled 3 times in 5 years. Now, if you average 36% rate of return, that means your money would double every 2 years. So 32 years, that means it would double twice in 4 years. That means that these shares compounded far greater than 36%, somewhere around 45% a year, more than likely, over the last 5 years on these particular shares. That is tremendous, tremendous growth. Now, the second sell-off happened during the 2022 bear market, where Broadcom went down 33% from its all-time high. Now, at that particular point in time, I didn't have extra money laying around to purchase Broadcom. So what I did was I ended up selling what I thought was a good company for a great company. As you can see, I sold shares of my Lockheed Martin to buy shares of Broadcom on October 3rd, 2022. That's 17 shares cost $7,624.50. And of course, the price per share was $448.50. Now, Broadcom, of course, again, did a 10-for-1 stock split. So that makes 170 shares at $44.85. So that $7,600 has now grown to $31,960. So you're looking at the aspect, again, if I do the compounding, 8,000, I will round up 8,000 doubles to 16,000, and then 16,000 doubles to 32,000. So in the course of less than 3 years, those shares, because I bought them at a lower point after a sell-off, they've doubled twice in a period of 3 years. Now, if you look at them in totality, both of these sell-offs created 52 shares at an average cost of $304.96. So that total amount that was invested during these two sell-offs was $15,858.02. After the 10-for-1 stock split, that creates 520 shares at the price on 318, Now you can see the $15,858 has now grown to $97,760. So that's one of the things you look at when you're buying great businesses during sell-offs. You can benefit tremendously over the long run. So, and I didn't buy Broadcom at 230 so I can sell it at 400. I don't buy low, sell high. I buy ownership in businesses because I believe they are compounding machines. Those are businesses that can compound your money at a high rate for a long period of time. If you can compound your money for a long period of time at a high rate, the wealth that you can build, that you begin to build, that can grow over 5 or 10 or 15, 20 years, begins to be tremendous. And it'll start blowing your mind after a while. You'll be like, oh, this money is growing way faster than I thought about. Now, we talked about NVIDIA. Broadcom again. So I put this first chart up again here, showing that $10,000 grew to $204,000. Now let's say that same time frame, the 10,000, let's say I never sold it and I held it through today. So now that $10,000 would have grown all the way to $1.4 million by doing absolutely nothing. Now, there's a couple of things I want you to point out here on this particular chart. Now, you see the average total return on the top, 38.7%. So over a 15-year period, Broadcom has performed or compounded at 38% a year. Now, one thing about Broadcom, they have the same CEO since 2006. You have the same person running the company that's generated these returns. Hock Tan, the same CEO that's generated these returns over this time. He is the same person that's running the company. He just oversaw the purchase of VMware last year for $61 billion. So he's continuing to add value to the company and add value to shareholders. And as a company, like I always said, I don't buy low, sell high. I bought Broadcom, I bought NVIDIA because I plan to own these companies for the rest of my life because of how they are compounding and the wealth that they can build by just leaving them alone and allowing these great CEOs to run the company. So you see 38% rate of return. Also, I want to point out the difference in the top one and the bottom one. One is the dividends that are reinvested versus the dividends that are not reinvested. You see there's almost a $400,000 difference between reinvesting the dividends versus not reinvesting the dividends. Some people want to take the dividends and they feel like I can take dividends and I can spread them out otherwhere and I can generate the same type of return. Maybe they can. I just choose to reinvest. I always reinvest all my dividends for all the companies that pay them. Now, also the thing I want to point out, when I talked about Broadcom being the best dividend growth stock, I pointed out here, you can see that the ending shares on the top chart has start date, end date, start price, end price, start shares, ending shares. The ending shares, because you are reinvesting the dividends. When you reinvest the dividends, they buy more shares of the company. The company raises the dividend every year, so it continues to buy more shares. The ending shares was $7,439. I mean, 7,439.8 shares. Now, one thing that Broadcom has done is it has grown its dividend. Since fiscal year 11, it has grown its dividend by 32% per annum. That means that it still goes to compounding, just like your capital compounds, the dividends compound too. So you can see how fast your money is doubling, and 32% compound annual growth rate of dividends for that long. Oh, this is since 2016. So since 2016, basically about a 9 to 10 year period, you're looking at 32% a year. So your money is doubling at a fast rate. Now, if you can see in fiscal year 25 to the far right, now Broadcom pays $2.36 per share for the dividends. So $2.36 per share for the dividends. And remember, the ending shares was $7,439.80. So if you take that 7,439 point, I keep saying 80 cent, 7,439.8 shares, and you multiply it by the $2.36 per share, you would get $17,557.93. So not only did your $10,000 invested grow to be $1.4 million, but now it's paying you $17,557.93 per year in income. That's why I call Broadcom the greatest dividend growth stock, because of how they grow their dividend. So you invested $10,000, it's worth $1.4 million, and it pays you $17,000 a year in income, in passive income, that you don't have to do anything but collect. You can reinvest it, or you can start using the income for whatever you wanted to. And Broadcom, their policy, their dividend policy, is to return 50% of the prior year's free cash flow as dividends. And their goal is to continue to grow the dividends per share over time as the cash flow increases. So that's very important. I'm not sure of how many companies that will pay 50% of the previous year free cash flow back to shareholders in the form of dividends. So now you look at the actual data of how the company is growing. You see that, the company is growing. It's the net revenue was $51 billion last year, and it was $23 billion 5 years ago. You see the gross margin, the adjusted EBITDA, and also the free cash flow. The free cash flow is the one that relates to the dividends. So they return 50% of the previous year's free cash flow as dividends. So you see the free cash flow, as it continues to grow, so too does the dividends. So you're able to generate capital growth and also growth in passive income. So that's why I say Broadcom, to me right now, maybe there are others that people see, but Broadcom, I think, is not only is it a fantastic company, but it's probably the best dividend growth stock that people can buy, that they can build up. It doesn't have a high starting yield. That's not important. What's important is the rate that it grows and compounds the dividends. So your income, your passive income, continues to increase So can you imagine 10 years from now getting $50,000, $75,000, $100,000 a year in dividends because your money is compounding? That's what companies like Broadcom offer you. So again, you don't have to be afraid of stock market sell-offs or volatility or things of that particular nature. And in my opinion, it's not investment advice, just informational purposes only. Broadcom, Nvidia are great buys at the moment. You take just like I took advantage of those other sell-offs. Now, Broadcom is only down, like, I won't say only, but it's down 15 to 20%, I guess. So it's not as great a deal as it during COVID when it was down 48% or when it was down 33%. But you can see how investing during downturns or when the money is down can benefit you long term. So again, informational purpose, and that's my tandem: Broadcom, Nvidia. Those are my top two companies. They're the fastest companies as far as growth that I own right now, and I think that they may continue that way far into the future. All right, so again, I will talk to you later. Have a great day, and don't be afraid of stock market corrections and volatility if you own great businesses. All right, talk to you later. Have a good one.